Welcome to my Forex trading class simplified. I know you might be wondering, oh, I want to trade Forex, but what are lot sizes in Forex? You might also be wondering, how can I start trading Forex and making profits? But same time you want French fries, but you have no money in your pocket. And also you are thinking of breaking the bank. Haha, no money, but there is money out there. People have a lot of it in their wallets. You are hoping that someone will give it to you. No, you have to find it yourself. So what are lot sizes in Forex? And Forex is the way. In Forex trading, a lot represents a fixed quantity of a currency pair. So since markets operate with large trade volumes, lots tend to serve as standardized positions. So every step you take can be calculated, right? When you have a car, your car moves in mileage and kilometers, right? So the movement of the car is calculated. Same as also in the Forex market, we have lot sizes that are used to calculate every time you put your money into your trading account. It tends to trade based on the particular lot size, right? So lot size is the amount of money or the units of your currency. They call it units, but it's an amount of money. So long ago, before our time, you needed like $100,000 before you can trade in the Forex market. But in our time, you don't need all that. You need just a fraction of the money, and then your broker gives the rest. So trading with lots, when trading with lots, especially with brokers, you can buy long. So when we say long in Forex, we mean to buy, or you can sell short. When you say short, we means to sell, right? So your lot size allows you to determine how much, right, you are going to make in the market, or how much you tend to lose in terms of the position that you are taking in the market. What do we mean by position? Every time you execute a trade, you are taking a position in the market. That's what I want you to know. So a lot size and pip value. Like I told you in my other video, a pip is the smallest movement, right? In the Forex market, that's the percentage. So we have different types of lot sizes. We have standard lots, we have mini lots, we have micro lots, we have nano lots, right? So standard lots, every time you put one standard lot, that you put one in your trading account, you lose $10 per pip, or you gain $10 per pip. Mini lots, you gain $1 per pip, or you lose $1 per pip. Micro lot, you lose 0.10 cents per pip, or you win 0.10 cents per pip. Nano lot, you either win, you will not go for that because it's so small and you cannot buy a Lambo with that. You cannot be rich with nano lot. You win 0.1 or 0.1 pip. So pairs where USD is the base currency. So an example, very simple example. We passed that slide. We are not going to look at it. Here is a simple example that I will show you. So first, you open your trading account. If you have one already, log into your trading platform and search for a currency pair, that is EUR or USD in the market list, and click buy. When you click buy, you enter a lot size, right? You can either enter one lot size or so, and then you put your margin. We are going to do what's margin and what is a leverage. We are going to go through all that. So you tend to calculate your margin based on the lot size. So you are trading with 100,000 euros, right? Which is provided by your broker, and you just pay half of it. So here is another example. Let's say you want to trade EUR USD, right? And you are using a standard lot size, which is one lot size, right? The current price is at €1.04248, meaning €1 is equals to 0.0248, right? So these are the details that you can see below. So the currency pair is EUR USD. That is two currency being traded between each other, and your lot size is one lot size, meaning you are trading with an account with a volume amount of $100,000, right? So they allow you to open a position of $100,000, and you get your entry Your entry price means the price for that day, the price for that time, right? This was there. Your leverage and your margin is also required. So how do you calculate lot size? Is what so many people ask. To calculate the lot size that fits your trade, right? First, you have to determine your risks. How much are you going to risk to lose? Do you have $50 and you want to trade $50? How much are you willing to lose in that $50? Please take a screenshot of this. Do you want to lose just $10? Next, you set a stop loss that if this trade I'm going for a buy and it goes below $10, right? This trade should close automatically, and you use a lot size formula. This is the formula below, right? That you can see. So step 2, you should understand a pip value. A pip value is the smallest movement, right? Percentage movement, right? So if it's a standard lot, it's $10 per pip. You either gain $10 every time that number changes, right? The fourth number in the decimal point, every time it changes. Let's say it's 6 and then it changed to 7, that's 1 pip. So you gain $10. Let's say it's 6 and then it reverses to 5. You've lost, right? $10. So that's how it works, and it helps with your profit and loss calculations. So what are the major currency pairs that are traded in the Forex market? The major currency pairs are some of the most popular currency combinations in the Forex market, right? Prices of these pairs often move in higher bands, but their movements can still be volatile. What do you mean by volatile? One might ask. Meaning they can be traded faster and quicker, so you can gain profit very fast, you can lose very fast. That a lot of people are already in the market that are trading it. So it's either you gain profit very fast or you lose profit very fast. That's what they mean by volatility. What are the major currency pairs, right? So opinions can differ on this. Many people have their own thoughts, right, on this one, opinions and points of view. But the major currencies are EUR, USD, USD JPY, JBP, USD, and USD CHF, right? And we have other currencies which are commodity currencies. I'm going to go deeper into that, which is AUD, USD, USD, CAD, NZD, USD. These are all major currency pairs that you can always find in the Forex market. So we are going to go into details, right? So we've done already what are the major currency pairs, the 4 traditional majors, commodity currencies. We are going to do cross currencies and what affects the price of the Forex pairs. So I want you to learn all these things so you can empower yourself with this knowledge. Empowering yourself with this knowledge will help you as a newbie Forex trader. Even if you are not a newbie Forex trader, you need the knowledge so you can also pass this knowledge over to people, because if you understand this knowledge, it can literally change your life. It can help you and it can expand you in so many ways that you tend to understand as life goes on. So these are the list of currency pairs, right? We have USD JPY, JBP USD, USD CHF, AUD USD, USD CAD, that's Canadian dollars, NZD USD, JBP EUR, EUR CHF, EUR JPY. So these are the currency pairs that you can see, and they are majorly the ones that are traded in the Forex market, right? And also these currency pairs are the ones you will find when you have your MetaTrader 5. So MetaTrader 5 is one app that you need to download if you are going to trade the Forex market. But I'm going to do a video on that and make sure that you are very much versed with the Forex market and gain all the required knowledge that you need in order to expand and then go into the market and then make your mistakes and make your corrections until you become as profitable as possible. But I can tell you, if you can gain this knowledge, then you'll be able to expand yourself in so many ways, and you are on your way to becoming a profitable trader if only you can. gain this knowledge. So this is the way they tend to pair. When we talk about currency pair, this is the way they tend to pair different currencies together. So now EUR trading EUR-USD. So EUR-USD is the most traded forex pair in the world. It holds the euro as the base currency. What's the base currency? That's the currency with the higher strength, right? At that moment, that year, that month, right? And the US dollar as the quote currency. So the price represents how many dollars you will need to spend in order to buy 1 euro, right? So it's that easy. So we have 4 traditional majors currency pairs, right? So as you can see, 1, we have EUR-USD. 2, we have USD-JPY. These ones, you always see people trading them. 3, we have JBP-USD. 4, we have USD-CHF. So every time you go to your MetaTrader 5 or you meet a Forex trader, you see 1 or 2 of these currencies in their MetaTrader 5 app. So they are widely traded by so many people around the world. Another currency is understanding how to trade USD JPY. The first thing that many traders will notice about USD JPY is that the value of a single pip is more larger than majority of other currencies. So when you are trading USD JPY, the market moves very fast. This is where you can either gain a lot of money or you can lose a lot of money very fast. Like your $50, before you know it is gone. Your $50, before you know it, can be $300. That's how it works. Another one that has liquidity and can move very fast is JBP. That's British pounds and USD, right? When they pair them together, it has the pound as the base currency and the US dollar as the quote currency, right? That you need certain amount of US dollar in order to buy JPY. Just as when you go to an exchange, right? You need certain amounts for you to maybe exchange to another currency. Another currency also that has high volatility and is widely traded is the US dollar CHF, which is the Swiss franc. That's Switzerland, their currency. So the presence of the Swiss franc among the top 4, right, currencies can look a little odd, because you at first glance you feel it's a small nation, but as you know, it has the World Bank there, so they are also not small. Don't look at them like that. After all, Switzerland isn't a global economy, one can say. So another one, we have commodity currencies. Commodity currencies are individual currencies of forex pair in which the price is determined largely by the value of certain commodity on which they are traded, right? So one, we have AUD USD, we have USD CAD, we have NZD USD, right? So these particular currencies, they are moved based on economies, right? And prices of certain industries that move them and their volatility. So when you are trading them, right, let's say the price of oil goes up in the market, these currencies tend to move too, right? So when trading NZD or USD, the final commodity currency which appears on most major currency lists is the NZD USD pair. This is the New Zealand dollar against the US dollar, otherwise known as Kiwi. That's their name, right? Agriculture as well as international agriculture, right? Global agriculture and international trade and tourism is key to the New Zealand economy. So they are moved by those things. Another one is USD CAD. So the value of the Canadian dollar is largely tied to the price of oil because the commodity in Canada's main exports. It's the commodity of Canada's main exports. So the Canadian dollar, every time, that's why you see in forex trading we have technical and we have fundamental analysis. You can listen to the news. The news also can make you to either gain money or lose money. For example, if oil or petroleum goes down, that means the Canadian dollar is going to go down. That's the way it works. Another one is AUD USD. If you want to start trading AUD USD, it's important to keep an eye on the value of coal and iron ore. So these ones are also major. Another one is cross currencies, right? We have cross currencies. These are currencies that don't contain the US dollar. Any currency that doesn't contain the US dollar, right? So as you can see in the examples here, we have JBP, EUR, EUR-CHF, EUR-JPY. So can you see the US dollar in any of these currencies? No, none of these currencies contain the US dollar, right? So any currency that does not contain the US dollar is definitely a cross currency, and it is not super strong, as you can know. Another one is exotic currencies. What are exotic currencies? An exotic currency is a type of currency that isn't widely traded because of high volatility and limited liquidity, meaning so many people are not trading them, like the Sierra Leone leones, like the Tabat, the Thailand Tabat, right? The South African rand, the Turkish lira, the Brazilian real, right? These currencies are not widely traded in the market. So different currencies and their names. You can take a screenshot of this, right? So Euro, US, USD, you can call it you have fiber, you have GoPa, we have cable, that's for British pounds, we have Swizzy, that's for Swiss franc. That's their nicknames. Australian dollar is called Uzi, Canadian dollar is called Loonie, New Zealand dollar is called Kiwi, right? Take screenshots of these ones. So what are examples of popular exotic pairs? So it's just me going over it again so you can have a glimpse and understanding of it, right? So the popular examples are JBP and ZAR, that's British pounds and South African rands, and we have Indian rupee, the Turkish lira. So what affects the price of Forex pairs, right? There are a number of factors that affect the movements of every Forex pair that you see in the market. This includes interest rates, geopolitical instability, that if there is a war, when there is war in Gaza or there is a plane crash, some of these things, foreign direct investment, or there is a news like the US Federal Reserve news, right? Or non-farm payroll news. So every time there is a major news, right, you should be conscious of checking it and know which news, because every Friday there is a news. So you need to be conscious. If there is a news, a lot of people don't trade on Fridays because of the news, right? If the news is bad, just know that that day you might win or lose lots of money, right? So one of it is geopolitical instability, which could mean that investors and traders lose confidence in a country's ability to govern, right? So in the 9/11 that happened,